So let's start our lesson today. Let's have a recap of what we have learned last lesson. Last time we have talked about the depreciation of the non-current assets, and firstly, we have talked about how to categorize the capital expenditure and the revenue expenditure. And the capital expenditure would be included in part of the cost of our non-current assets, and therefore we are going to provide depreciation for them, while the revenue expenditure would be charged as an expense directly. So we would directly charge as an expense in the income statement, even though it may be related to our non-current assets. For example, just like what we have talked last time, if we are providing an insurance for an equipment, maybe for 1 year, the annual fee of the insurance. However, the insurance would be charged as an expense. We won't include in the cost of the non-current assets. So this would not be provide depreciation. And the second part, we have talked about the free depreciation method last time. We have briefly introduced the formulas of the straight line method, the reducing balance method, and the usage-based method. So there are some information we have to know if we are going to calculate the depreciation expense for each by using each kind of methods. And today, we're going to talk more about these three methods. We'll focus on the characteristics of each of them, as well as an example followed up by calculating different depreciation expense. So first of all, let's start with the straight line method. Last time we have talked about the annual depreciation of the straight line method would be calculated by deducting the estimated salvage value. The salvage value is kind of the remaining value. Remaining value after using, like maybe for 10 years, and we're estimated this can be sold for maybe $1,000. So it would be the remaining value will have a specific name called the salvage value. And after deducting the estimated salvage value, we would divide the total amount by the estimated useful life. So therefore, you may foresee that using the straight line method, the depreciation would be a fixed amount for every year. Just like the example we have talked last time, every year would be $20. So it is a mostly used method in our daily operation. So you can write down, it is the most widely used method of depreciation. And so you have to be focused on, you have to be careful because it will always appear in your examination. And the second point would be the depreciation is the same for each year throughout the whole asset's useful life. So as we have just talked about, each year would be having the same amount of depreciation. So it is very simple to apply, and it is very easy for the accountant to mark down each year's depreciation. And for the last point, it is suitable for the assets with consistent utilities. What means by consistent utilities? Meaning that, for example, a building or furniture, I won't say the quality of the buildings would be significantly decreased after maybe 5 years or 10 years, but it may be evenly distributed. The quality would not be changed significantly. Therefore, we can evenly distribute the depreciation throughout maybe 10 years or even 20 years. So this is some of the examples that we are going to apply the straight line method. So after introducing the characteristics of the straight line method, let's have a demonstration exercise, which is a simple example for calculating the depreciation expense. First of all, let's have a look of the question. Mr. Wong purchased an equipment, cost $22,000 for administration office in January the 1st in 2015, and the cost of importing is $2,000. So this cost of importing is kind of the transportation cost. And at the end of the 4 years useful life or 10,000 working hours, Mr. Wong believes that he can sell the equipment for $1,500. So I would use different colors to highlight the key points for different numbers. First of all, the first question I would like to ask whether the cost of importing, which is the transportation cost of this equipment, should be categorized as an capital expenditure or revenue expenditure. Think about what we have learned last time. How do we define the capital expenditure or revenue expenditure? Is this cost of importing compulsory, or we may say is this a must for us to bring the equipment to our office, or whether it is just providing short-term benefit? Each year we have to renew.
The capital one.
Yes, it is the capital expenditure. So this $2,000 would be included in the cost of equipment as well. So first of all, the cost of the equipment would be $22,000 as well as the transportation cost. So the total cost of this equipment would be $24,000. So we get the cost of the equipment. And the second part, I would like to ask, what is the salvage value? The remaining value, or you may say the sellable value after we have used this equipment for the whole estimated useful life.
1,500.
Yes, $1,500. This would be the salvage value. The remaining value after using for 4 years, and we are estimated we can sell this amount. This is the remaining amount. So we have marked down this. The next part, the estimated service life. It is provided in the question either 4 years or 10,000 working hours. We can put down 4 years or 10,000 hours. But usually in using the straight line method, the estimated useful life, we are focusing on the number of years instead of the number of hours. So the number of hours in this case is irrelevant. Sometimes you have to find that which numbers we are going to use or which number is irrelevant. So after we have find all the key points, the main numbers we are going to use to calculate our depreciation. So we are going to put all these numbers into the formulas above, like the total assets cost, the salvage value, and the estimated useful life. So in this case, the depreciation expense, very simple. The cost would be $24,000, and the salvage value, the remaining one, would be $1,500. After deducting the remaining value, we are going to divide it by the estimated useful life, which is 4 years. So very simple, we can get the answer of the depreciation expense. I'll give you some time to calculate. It is very obvious We have the formula already, and we are just calculating the amount, which is $5,625. So I would like to ask whether this depreciation expense would be changed maybe 1 year later or 2 years later. Would this amount be changed? Or would this remain unchanged?
Remain unchanged.
Very good. This amount would be remain unchanged. So in 2015, 16, 17, and 18, throughout the 4 years, we are using the same depreciation expense, which is this amount. So we can put per year in behind of the amount we have calculated, because the amount would not be changed. We do not need to calculate the 4 years separately, and we could get the total amount as well. And so you can put the total amount in the boxes provided. The 4 years depreciation would be the same by using the straight line method. And so the total amount would be I see some of you send a message to me calculating the correct amount. So very good. The total amount would be 22,500. Very nice. So you would see that the straight line method is very simple. We could calculate the amount throughout maybe 4 years or even 10 years, but they are using the same amount every time. And we can get the total amount of the depreciation after 4 years would be $22,500. So if you think about that, the depreciation is going to deduct the cost of the assets throughout these few years. After 4 years, we are depreciating this amount. If we are going to deduct the cost and the total depreciation, what will we get? The remaining amount is 1,500, which is the salvage value. So we can calculate the depreciation and the cost, and then we could deduct them to get the salvage value at last. So be aware of how we can apply these kind of formulas. Sometimes I may provide the depreciation for each year and the cost, and I would like you to calculate the salvage value for me in reversely. So very nice. I see most of you can get the correct amount. And let's go on to the second part. The next would be the reducing balance method. And reducing balance method would be a bit complicated, more complicated than the straight line method we have just mentioned. First of all, because we're going to use the total assets cost, deducting the depreciation already charged. The depreciation already charged, which means each year may be different. Maybe the first year I've only charged $10. Maybe the second year I've charged more, let's say $20. So each year's the depreciation already charged, or you may say in other words is accumulated, would be different. So we can foresee that by using the reducing balance, the annual depreciation would be different for every year. And last time we have introduced this diagram, we will say the depreciation and to the year, we have shown a graph that usually in the earlier years, the depreciation would be higher than the later year. So why would we use this method if it is so complicated? We're going to talk about the characteristics of this method. First of all, the depreciation is higher in the earlier years, as we have mentioned. So the first point would be the depreciation expense is higher in early years. than in the later years. Second point, it reflects that the fact of there may be a greater loss in the market value of an asset occur in earlier years. So why would this case happen? Think about your mobile phone. Usually, if you're using your newly purchased mobile phone, the phone would be running faster, or you may say its quality would be higher in the earlier years. So therefore, the productivity is higher in the first 1 or 2 years. But after you have used 2 years, sometimes you may think that, oh, my phone is very slow, running very slow. Can I change a new one? Or you may say that I cannot afford the speed of the phone going so slow. Therefore, after a few years, the function, or you may say the performance, will become worse. Therefore, this is reflecting the fact that some of our machines or maybe some equipment would decrease their productivity throughout maybe a few years, after a few years. So that's why we are going to using the reducing balance to reflect the realistic facts. So for the last point, it is suitable for assets with diminishing utilities. Different from what we have mentioned in the straight line method, but some assets may have diminishing utilities, which means their productivity will decreasing 1 year later or 2 years later, rather than we can evenly distribute their quality throughout maybe the whole useful life. So this is the key points of the reducing balance method, and we are going to calculate each year's depreciation separately, as we know that each year may be different. So first of all, I will demonstrate the first 2 years to you. Same as the demonstration exercise 2, we are going to calculate the depreciation by using the reducing balance method. So the information provided is the same. We have the cost of $24,000 and we have the salvage value of $1,500, while the estimated useful life is 4 years. However, in the reducing balance method, the salvage value is not relevant. We could cross out it because the salvage value has already included in the fixed depreciation rate, while the estimated useful life as well. But the fixed depreciation rate would be given in the examination, so you don't have to worry about how to calculate this rate. The formulas in the above is just for a reference if you want to know how to calculate the fixed depreciation rate. So first of all, in the first year, the cost, if we're applying the above formulas, the total assets cost would be $24,000. And in the first year, we did not provide any depreciation yet. So the depreciation already charged, or you may say the accumulated depreciation, would be $0 in the first year. Then we can directly multiply to the fixed depreciation rate, which is provided. In this case, is 50%. So we can directly get $12,000 depreciation for 2015. This is very simple because the first year we don't have any depreciation charged already. So for the second year in 2016, we're going to use the same cost because the cost will not be changed. The cost is still $24,000, would not be changed throughout the 4 years. This is the same amount. However, in 2015, we have already charged $12,000 depreciation. Therefore, we are going to deduct this amount. First, this $12,000 is by the above, charged in 2015. After deducting the depreciation charged, we can multiply the fixed depreciation rate again, which is 50%. So we can get the amount which is smaller than the first year. In this case, it is $6,000. So you could foresee that the accumulated part of the depreciation would be keep on growing, increasing. However, the depreciation expense in the 4 years would be decreasing 1 year by another. So I would like you to try to get the amount of 2017 and 2018. And you could send the answer to me through the private chat room. I can help you to check your answers, whether you get the correct amount. So I will give you maybe 3 minutes to calculate the remaining 2 years. I see many of you get the correct answer already. Some of you even corrected your answer already. I see some of you use the wrong method because remember, we are not only deducting each depreciation amount for the previous year, but the accumulated for the whole part. Maybe let's say we are going to, I'll demonstrate the 3rd year depreciation. Some of you may think that, oh, 2017, so the cost would be the same. And maybe I'll just directly deducting last year's depreciation. If you're calculating by this method, the depreciation expense will be higher than the previous year. You would get, if you're going to calculate this kind, you would get $9,000. And some of you get the wrong amount because you're not using the accumulated part. Accumulated means every year we have charged previously, we have to include in this part. So even the 1st year charging, the $12,000 would be included here as well. So I will change the answer to $24,000 minus $12,000 and minus $6,000. Then multiply by the 50% fixed depreciation rate. So you would get $3,000. If you get the amount of $9,000, actually you can think about that. Why would this be higher than the previous year? We are saying that the productivity is diminishing, is decreasing. So each year's depreciation expense would be smaller than the previous one. If you get 9,000, it's even higher. So that's why you can know that you have made some mistakes but in calculating the depreciation expense. So in the final part, in 2018, we have to deduct all the amounts charged previously, which are $12,000, $6,000, and $3,000. So be careful of this. We are going to charge all the previous depreciation expense and times the fixed depreciation rate. And after you have calculated all the depreciation expense throughout the 4 years, I would like you to calculate the total amount as well. Try to get the total depreciation expense as well. And put in the boxes provided. And I see many of you gives me the correct answer already. Yes, very nice. Most of you can easily calculate the total amount would be 22,500. So if we're using the different methods, can we compare these two amounts, the total amount? They are actually the same. They're actually the same. However, each year's depreciation would be different. For example, in 2015, if we're using the straight line method, the depreciation would be $5,625. But if we are using the reducing balance method, the amount would be much larger, would be $12,000. However, after charging for 4 years, we could get the total depreciation is the same amount, which means their salvage value would be remaining $1,500. Actually, they're getting the same amount. So be careful of using these two amounts. These two methods would be most frequently appears in your examination as they are most widely used. So let's go to the next method, which is the usage-based method. This would be quite special because we are not going to use years or the percentage as the basis for calculating the depreciation anymore. However, we are going to use the units used during the years, or you may say how much it produced, how long it used throughout the years. And so last time I've demonstrated the diagram here. Sometimes our production in the first year may be very little, and it may be increasing or either decreasing throughout different years. So this would be a fluctuating depreciation throughout the whole useful life. Be careful of this. So last time we have demonstrated the formulas, and now I'm going to talk more about the characteristics of the usage-based method. Firstly, this would be expressed in terms of the total units of usage or production, which means we are going to expect, let's say, and machine is going to produce different, our inventories may be producing for 100 hours, and we are going to use maybe 10 hours in the first year. So we're going to use over the estimated total units of usage, 100 hours, and the first year is going to use 10 hours. Very similar to the example we have mentioned last time. So this would be 1/10. And you may say it is 10% in the first year using the usage based. If we increase the number of hours using in the second year, maybe increase to 30 hours, then we're going to increase the percentage into 30% in the second year. So each year's percentage, or maybe each year's usage, is different. So why we will use this kind of method? Because it is based on the actual usage of the assets, and it can give us a more accurate and realistic charge of the depreciation expense. Why would we say so? Because we are focusing on how long we have used throughout the year. It is the actual amount, instead of directly calculate a percentage which is estimated by our previous experience, by our past experience. This accurate recording would give us a more realistic, more accurate charge of the depreciation. And for the third point, we're going to accurately recording the actual output or units. So you can foresee that this method is very time consuming, because we have to mark down every time, today I've used 2 hours, tomorrow I've used 3 hours, and etc. The marking work, or maybe the paperwork, would be very complicated, and it would increase our time cost and labor cost as well, because we need to hire a labor to help us to mark down these kinds of using. So this is not a method we will most frequently use, but it can give us the most accurate results of the depreciation. We have to balance the cost and benefit, and the management in the company will decide whether which method would be used in our operation. So the method would be suitable for some assets which is depreciate more rapidly. For example, some machinery may be used very frequently, and maybe they're using their usage may be different throughout the 4 or 5 years, and we have to use the actual output to calculate a more realistic depreciation for them. So these are the 3 kinds of methods, and we have talked about the characteristics of these methods. Is there any question you would like to ask? If no, we're going to continue to the demonstration exercise 4, which is similar to the demonstration exercise 2 and 3, but this time we're going to use the usage-based method to calculate the depreciation. So, as we have mentioned just now, we are going to use the actual output, or maybe the outputs for each year have to be used. So the question provides the 4 years, the number of hours we're going to estimate they will operate. And you can see the total of these 4 hours would be the total estimated useful life, would be the same if you add the 4 numbers together, because we are going to the leftover should be remaining 0 hours after the 4 years usage. And you can see that in the first part of this method, we're going to use the total SS cost deducting the salvage value. This part is very similar to the straight line method. So the first two items, the information provided in the demonstration exercise 2, we are going to use in this case again. So I will demonstrate the first part of this demonstration exercise 4. Firstly, in 2015, the number of hours used is 2,500 hours. And we are going to calculate the cost minus the salvage value first in the very beginning, which is $24,000 minus $500. This is deducting the salvage value, and we are going to times a ratio. The total estimated service life would be $10,000. Sorry, 10,000 hours, but we are going to use 2,500 hours only. So we can foresee that this is the ratio of 1 to 4, or you may say 25% in the first year. And we can get the amount $5,625 in the first year. You can see that this amount is the same as the straight line method if we are calculating in the first year. However, in the second year and in the third year, their number of hours used are different. So we're going to calculate a different amount for the depreciation in 2016 and 2017. And I would like you to try to calculate the following few years. And you just like what we have done, you can send me the answers and I can give you the check figures, whether you are correct or not. So I'll give you maybe 5 minutes to calculate the remaining 3 years, as well as calculating the total amount of the depreciation in the box provided. I see many of you have calculated the correct answer already, but some of you calculate an amount with decimal. Be careful. Try to calculate with your calculator again. So I would show some of your classmates' work to you. You can see that he calculated the 4 years depreciation expenses using the cost minus the salvage value and multiplied by the ratio between the total estimated useful life and the true estimated operation hours in each year. So we can get the 4 amounts here. And I see most of you have calculated or corrected the correct amount already. So it is very simple. And you can see that the total amount is 22,500 as well. So no matter which kind of methods we're using, they are the same. We can get the total depreciation throughout the 4 years. We can get the same amount. The only difference is the depreciation in each year, which may be different. So be careful. If the question is asking you to use the 3 different methods to calculate the total depreciation, you can check the amount whether all of the 3 total amounts are the same. If they are not, which means you did something wrong. Otherwise, they should be having the same total amount. And the remaining would be the salvage value. So I see most of you can get the correct amounts, and I would go on to the next part of the notes. And here's a summary for the free depreciation method. We can see that the straight line method, the depreciation is equally or evenly distributed throughout the whole asset's life. So you can highlight the keywords equally, and you can add evenly distribute. You can mark down for yourself. And the reducing balance would have a higher depreciation in earlier years, and then it would decrease gradually. You see, I bold the keywords already, but you can highlight the keywords to make yourself be clear and be aware of the depreciation method, their key features. And for the last one, the usage-based method, the depreciation is based on the actual units. So you can see that each year may be different. It may be different in every year. So we have tried to use the 3 kinds of method to calculate the depreciation expense for the same situation, for the same information provided in the demonstration exercise 2. And so let's take a 10 minutes break and we'll continue in 4:40. Please come back at 4:40. And if you have any questions, you can ask me privately during the break.